The uranium space right now, I've been in this market for the better part of 2 decades, and I've never seen stronger fundamentals, and people are starting to realize that right now. So it's exciting.
Good morning, everyone. It's Andrew with the Market Mindset. We've been speaking about uranium and nuclear energy quite a bit, and there's been quite a bit of news in the past year. And in the mining sector, that is the portion of the mining sector that has done outstanding in the past year. And there's a lot of attention on the supply-demand curve of uranium, the competitors out there struggling for dominance, and where are you going to get it? I mean, that's a big factor right now with the U.S. saying that they're going to triple nuclear power by 2050. That's a long road, and it's a challenging road. And we need to be looking at different stage companies to offer us exploration and production. And ATHA Energy is one that is exciting and new. And we're going to be speaking with Mr. Troy Boisjoli, who has a wealth of experience. He was led the team at the Arrow deposit for NexGen. And he also, before that, was an exploration geologist at Cameco. So what we're going to notice here is that not only does the CEO, Mr. Boisjoli, have extensive history and experience, the whole team does. And that's what makes this exploration story stand out. So welcome, Troy. It's great to get a chance to speak with you. I saw you at the Metals Investor Forum, which was great. I wanted to be there specifically for that nuclear sector. And really, even VRIC would have been, I think, a real morbid, down, bummer side if it wasn't for uranium and nuclear.
Yeah, Andrew, I appreciate being with you here today. Yeah, nuclear, the uranium space right now. I've been in this market for the better part of 2 decades, and I've never seen stronger fundamentals. And people are starting to realize that right now. So it's exciting.
Well, let's talk a little bit about that, because with any junior, you're always looking for that kind of trio of the project, and then the team, the management, who's on board, and then who's the capital backing it. You know, it's those three kind of things. And you guys have it all, as far as I'm concerned. But let's talk. And it's hard for people to talk about themselves. But, you know, I mentioned in the intro, you know, you've worked at Cameco, you've worked at NexGen, you worked on the Arrow deposit. So give us a little bit of a breakthrough of some of the highlights of yourself, and then, of course, the rest of the team, because there's a lot going on.
Yeah, there's a lot going on, and sure. I'll start with myself. I'm a geologist by background, Saskatchewan guy. I came up through Cameco Corporation. I was an exploration geologist with Cameco. Had an opportunity to move over to operations. At that point in time, they had two operating mines. They had McArthur River and the Rabbit Lake Mill. The Eagle Point mine supports the Rabbit Lake Mill. I had the opportunity to be the chief geologist at Eagle Point. From there, as you mentioned, I had the good fortune of moving over and had the opportunity to work on the world-class Arrow deposit. I went in there at a point in time when it was just after the maiden resource was out, and had the opportunity to help steer that project from maiden resource right through to essentially basic engineering, whereas the vice president of project development, operations, exploration, and community, which is a mouthful, but hey, there was a lot going on at the time. And you know, tremendous opportunity. You know, you look at our team from the technical perspective. We also have Doug Ingdahl, who's a managing director with us. Doug has a similar experience that came up through Cameco Exploration, was a senior geologist at McArthur River, at an operating, well, the McArthur River, I guess you can say the McArthur River.
Yeah.
Was a senior geologist at McArthur River. Doug Adams, our vice president of exploration, similar background, came up through Cameco, worked for Urano, worked for Denison. Doug's a guy that has touched almost every uranium deposit across the basin. So that's on the technical side, and it goes deeper from there. And then on the capital market side, we have an exceptionally strong capital markets team. You know, you look at our chairman, Mike Castano, and the group that he brings with him. We've raised over $65 million to date into this deal, and you know that's off the back of just being listed in April 11th of last year. So very strong capital markets team, and you know then that gets us into our asset base, which we can jump into in as much detail as you want to get into.
Yeah, no, and it's great because, just as people may or may not know, I mean, Athabasca is the place to be in North America. Arguably, I mean, I know Wyoming has some great projects as well, and Texas, but really world-class. Everyone knows Athabasca Basin.
What ATHA represents is a growth platform in the uranium space. It was specifically designed for where we're at this stage in the commodity cycle. The foundational assets, and I'll break it up into two segments. It's ATHA pre-December 11th, or pardon me, December 7th, which is when we announced a bit of a transformational set of acquisitions with LUR and 92E. But say pre that, okay, upon listing, we had the whole approach of doing exploration at scale across the largest land position in the best uranium jurisdiction in the world, in our opinion. That didn't just happen overnight. That land position, 3.4 million acres, was acquired over about a decade by two of arguably the most successful guys in the generative space in the uranium industry, that were helped the foundational components behind Hathor in the last cycle, and also were part of the foundational pieces of NexGen Energy. So obviously very good resume there, put together a very significant land position in the basin that was backed by over $40 million in capital that had been raised to that point, with the whole concept and whole thesis of being able to explore at scale, across the largest land position in the best uranium jurisdiction in the world, with then the ability to move forward and test the top tier targets out of that position first. Okay, and that was one area of growth. The other areas of growth that we looked at were, we also have a 10% carried interest in a large percentage of NexGen Energy's exploration property. So that's a 10% carried interest right up to a bankable feasibility stage, at which point it would become either participatory or translate into an NSR. So that was the second leg of the growth strategy. The third leg of the growth strategy obviously came through consolidation and M&A. And that's what we were able to achieve by late 2023, December 7th, pardon me, of last year. We announced what I view as very transformational acquisitions or proposed acquisitions of 92 Energy and Latitude Uranium, which now then on a pro forma basis gives us a completely different look. Complementary assets, matured our asset base, etc. And happy to jump into that as well.
Well, yeah, lead us off. So, I mean, you're a newer company, so there's the share structure is clean.
Yes.
Depth of knowledge and management team, and that's important because, like you said, your timing has been great. People have finally come around, and there's always been a gate in that there's politics at play, but it seems to be after COP28 that everyone's on board and they're all finally acknowledging, maybe except for Germany, they're holdout, that nuclear is really the only feasible way, that's the cleanest, that's the safest entry point for anyone if they want to have baseload. And
yes.
Really, if you take off Kazakhstan, which has its own set of issues and politics and Russia and whatnot, where else do we look for? We look really at the Athabasca Basin.
Yeah, we look at the Athabasca Basin, and I would extend that as looking across Canada. Okay,
yeah.
You look at from a macro perspective, then we'll zoom in. Okay, you look at OECD nations, and about 75% of the global demand comes out of those nations. Only about 26% of the supply comes out of those similar nations. You look at the setup that we're talking about here, and we're talking about the emergence of a bifurcated uranium sector. And that bifurcation. And then you look at the supply-demand imbalance between OECD nation supply and demand profiles, just further increases the importance on Canadian uranium and on North American uranium, US, Canada, etc. And that's where ATHA comes in. So we had a dominant position in the Athabasca Basin in terms of the size and scale of our exploration properties. But then you look at the acquisition that we did in December, and the proposed acquisitions that we did with 92 Energy and Latitude Uranium, and our acquisition criteria was strictly focused on maturing our asset base, and in doing so, looking for assets that still had significant and remaining upside potential and scalable potential within them. And I believe we're able to do that with both Latitude and 92 Energy. And I'll go through the asset base with Latitude first. Okay, Latitude, the cornerstone project with Latitude was Angulac project. Anguillac has a LAC 50 lac 5 deposit, highest grade, one of the highest grade uranium resources outside of the Athabasca Basin. It's situated in Nunavut, just across the Saskatchewan border into Nunavut. And that's a deposit that has a historic resource of 43.3 million pounds at grades of 0.69% U3O8. To put that into perspective, the remaining resources at Eagle Point, for instance, are just over 0.7. So right in that Athabasca grade range, right? And scalable. So it's at 43.3 million pounds. And, I've spent the better part of 20 years expanding basement-hosted uranium deposits, whether that's from Eagle Point. At Eagle Point, had the opportunity to go in there and expand that deposit after 25 years of mining, and about 10,000 drill holes into a team that we brought there, expanded that resource by about 50 million pounds over the course of 2 years. At Arrow, had the opportunity to join Arrow after the maiden resource. That was 202 million pounds, grew that resource up to about 336 million pounds. Okay.
Yeah.
And so we look at where Anguillac sits. We look at a basement hosted uranium deposit that's structurally controlled. It's something that our team knows very, very well. And then the ability to expand that resource is something that we're really keen to get focused on here in 2024 once these things close, because we view the expansion potential within the footprint as being significant. Andrew, when I look at basement hosted resources, I don't just look at the geologic targets. In my view, you also have to look at the performance of them over time. Okay. And that resource went from 14 million pound maiden resource, 1 year of drilling went to 27 million pounds. Another year of drilling went to 43 million pounds. So It's still on the very steep part of that resource development curve, right? And so that combination of factors, when we look at it very objectively, we have a serious growth scenario that we're pursuing in 2024 through an active drill program, planned active drill program post closure of the acquisition with LUR. Then that gets us into 92 Energy. 92 Energy has a Gemini project. The Gemini project is on the eastern edge of the Athabasca Basin, right at the edge of the basin, right where the sandstone kind of peters out. It's under limited cover. And what it is it's a newly discovered basement-hosted trend and corridor within the basin. There are very few of those. And, the two most prolific ones in my mind are the Patterson Lake corridor, which hosts the Arrow deposit, the Triple R deposit, the Spitfire deposits, etc. About 11-kilometer corridor that hosts just under 400 or just under 500 million pounds of uranium. And then the other one is the Rabbit Lake corridor. And it goes Rabbit Lake, Collins Bay, A zone, B zone, D zone, C zone, etc., and then into Eagle Point. And that corridor has produced over 200 million pounds of uranium historically. And it was striking to me when I first had the opportunity to tour and visit the Gemini project, laid out the core, walked through the core at the GMZ zone itself, the similarities between the Rabbit Lake corridor, both in terms of the structure, the alteration, the mineralization, and the geology, the similarities between the GMZ corridor and the GMZ zone and the Rabbit Lake corridor were striking. And so the opportunity for us in 2024 is to go in and expand GMZ, extend the mineralization that's been discovered, that's known, but then also, and very importantly, advance exploration along that unexplored to underexplored corridor that goes back to the north. That gives us, in my view, a higher probability of discovery and of discovering additional resources than just greenfields exploration alone. So two very exciting acquisitions for us that we're really excited about getting into in 2024 and advancing in this calendar year.
So another kind of way to look at it is that you've got like a tiered tranches of assets that are like shorter term, medium term, longer term. Of course, depending on results, one could shift to another place if it moves up. But maybe you could also tell us that for people that are newer, the exploration for uranium is a lot different than, say, like gold. Like you could find, you're going to get some quick results from searching out earlier than, say, with gold. Sure.
Like some differences would be, when you're at the drill, okay, when you're drilling for uranium, you get immediate feedback as to the grade and magnitude of the mineralization that you're drilling from two perspectives. Okay, you get it from a scintillometer, which is just a handheld instrument that gives you counts per second. But then every hole that you drill, you also probe with a downhole gamma probe that also records radioactivity or specific activity in the form of counts per second, both of which you can work to correlate back to an equivalent grade percentage. So from a practical standpoint, very quickly, if not almost immediately, in real time, the results of your drill program, which is important for two reasons. It's important because you can help then guide the market as to the results, and if you're delivering on the results that you anticipated to have. And the other perspective is that through integrated workflows internally, and I've done this at multiple locations now, is you define workflows that have a natural feedback loop in them. And what I mean by that is you're able to analyze results back into an integrated data model in real time, and then be able to make real decisions in real time based off results coming off the drill, which helps you to optimize the allocation of capital into the ground to achieve the results that you're trying to achieve. But that's a definite advantage of the uranium space for sure.
Yeah, you're getting that feedback, or that the feedback on your thesis very quickly, rather than having to send things away for 2 weeks to 3 months,
Sure.
and then waiting for results, and then applying that data. That's great for either having to pivot a little bit, or like, yeah, we're chasing after the right direction here. That's a huge advantage.
It is a really big advantage, and it allows you to optimize your allocation of risk capital into the ground, without having to wait for a season and then come back the following season and adjust. It allows you to adjust and make decisions in real time on the fly. But back to your original point, is that we have properties along the entirety of that exploration risk curve, and assets along the entirety of it. Most people would be familiar with the Lassonde curve, right? And you go from early stage exploration, and the first really big run up there is getting into, say, a measured resource classification. Well, you go from the apex or the peak of that first curve and go everywhere to the left, and everywhere to the left of that represents a significant amount of torque.
Yes.
And that's where we're investing.
Yes.
So we have 7.1 million acres of exploration property across the Athabasca Basin, the Thelon Basin, and the Central Mineral Belt in Labrador. We have a post-discovery project in the Athabasca Basin, which is slightly more mature, right? Post-discovery project in GMZ. And then we have an early stage resource project in Angulac that has significant expansion potential in our view. And so we are going to be investing in 2024 proportionally along the entirety of that early part of the Lassonde curve, which is exactly where we wanted to be in terms of providing. We've built a company that on a pro forma basis, we believe has unparalleled amount of exploration torque at a point in time when we're seeing a uranium market that, in my view, is unparalleled historically.
Yeah, I can't be withheld or stated. That's where I was kind of going at with this, is that there's a supply and demand gap that's broadening. And we see even problems in Kazakhstan with getting sulfuric acid. They've even kind of downgraded their supply by 17%, saying they're not going to hit. So we know that there is, and that's just for this year. Like, there's going to be a gap that's widening and widening, and people want to know, okay, what projects can come on? Where is this supply going to come from? And you've got a structure and these properties now. And once again, the team, worked at all the big names, have seen this in Athabasca, know the structure. I mean, it's a great setup, but it's that torque or that leverage that you have. Yes. So if someone is looking for a vehicle that's new, that already hasn't had a major run up, this is something they should delve into a bit more, I would say, to ask some more questions about.
Yeah, it's been received well. You look at the. First of all, there's not very many three-way transactions that you see out there, and the reason that we have the ability to do that is we know the space, we know the assets, we know the players, and so I started with ATHA. I came on board in end of June 2023, and by December we had a three-way transaction, proposed transaction, ironed out, and the only reason we were able to do that is because we have a in-depth understanding of the uranium space and of the assets that are out there, and we're able to get across that evaluation very quickly. And more than more than that, we know the people. All right.
Yeah.
And that's as important as knowing the assets as we know the people. And then you look at how the transaction was received, call it from day one, right? Like we opened up, we announced the news. I think we were trading at we were trading at 92 or 93 cents. We closed up 7 or 8% on the day as the acquirer. We did a concurrent capital raise where we opened that up at $14 million. By mid-morning, we upsized that to $23 million, closed on 23 and a half. And the majority of that was using a charity flow-through mechanism in which $9.5 million was brought in at a average price between $1.57 and $1.75. So amongst really just three names. Okay. And so
Yeah.
and then the senior part of that financing was supported by two very notable names in the uranium space and very knowledgeable companies, and that's ISO Energy and Mega. Mega is run by Richard Patricio, who is one of the co-founders of NexGen Energy, and is a board member of NexGen. He's he is the current chairman of ISO. So supported by the industry, supported by the public markets and the capital markets. So we really like where we're at. That sets us up. And I think this is one of the critical factors. You hear 7 million acres, you hear investment along the entirety of an exploration risk curve, et cetera. And you need to have a balance sheet to support that. And
Yes.
so on a pro forma basis, we'll have around $65 million in cash on the balance sheet to be able to very aggressively advance and explore in this cycle throughout 2024 and beyond. And what it allows us to do is to continue to be aggressive. So when we have success, we're going to be able to continue to add resources and accelerate that advancement of any of our assets. You look at areas where we are going, where we have success, where we're going to be allocating capital, and we'll just keep going. We'll just keep working.
Having that pool of capital, I mean, to raise that in a challenging market is incredible. But that speaks to the experience, the management team, and the trust in the thesis. I mean, it's huge.
Yeah.
This, for someone who's just kind of getting up to speed and going, how do I get, like, who do I look at? I understand that nuclear seems to be the way. This offers that leverage. Because they can look at Cameco. We own Cameco, and I love Cameco.
Sure. Yeah.
And I love the fact that Cameco bought Westinghouse, because I was like, ooh, there's challenges, but I was like, they're going to be fully integrated. This is wild. And you look at even like Saskatchewan, they're looking at their eVinci reactor and considering that. And you're like, okay, this is really happening. This isn't just talk. It's happening in Canada, and it's going to happen in the US at a much bigger multiple to even attempt to keep up with, say, China, who's got 44 reactors that they've put up or currently working on,
and more in the mix, yeah,
and more to come. Even if in total the U.S. and Canada decided, let's do 20, the commitment for a lot of uranium, say if it's an SMR, that's upfront. They have to buy that upfront. But
that's right.
Like it's a massive undertaking, and the amount of uranium we're going to need, I think people are just starting to kind of put it together, and having that flow of projects is quite exciting.
I cannot agree more. And that's why ATHA was built. That's why we came to market when we came into the market. And I can't reiterate enough that our strategy is a growth strategy in this market. We want to continue to expand. We want to continue to get grow. That growth again comes through three pillars that we talked about. It comes through investing in our asset base. It comes through exposure to the exploration programs that NexGen has going on across that carried interest area, and it comes through continuing to look at consolidation opportunities and value accretive consolidation opportunities. And there's still some out there. It's kind of the tale of two worlds right now. When you look at the highly investable names like Cameco, NexGen that are performing extremely well. You mentioned Cameco, like they are. They've always been a sophisticated company, but with the acquisition of Westinghouse, they are a highly sophisticated company that's completely diversified. Across a vertically integrated business in the nuclear fuel cycle, right? And then you look at NexGen, like Rook One, Arrow is a world-class deposit by any metric. You look across any metric,
Yeah.
it is a world-class deposit. And so you expect those names to perform well in a uranium market like we're going into, and they've performed extremely well, and so they should. You start to go down cap of that, and there's good names down cap of that as well. But then you get to a certain point, and there's a big gap, Andrew. There's a big gap in the market, right?
Yeah.
And then there's a big gap in terms of that comp table, and then you go kind of 100 million market cap and below, and there's quite a few names. There's quite a few names below that, and those names, the rifle, whether it's a bit of elasticity that's probably snapping back into the market, but money just hasn't, from an equity perspective, just hasn't reached down yet, right? We
Yes.
anticipate that's going to happen, but from our perspective, our growth strategy is, we have the objective of becoming the institutionally investable uranium exploration company in this cycle. There's only, institutional dollars have certain criteria that you need to, liquidity, price, and market cap standards to be investable. And that's a pool of capital that we're targeting across the across our asset base that we've established. And we like that strategy, and we're going to continue to pursue that strategy moving forward.
That's one of the things that was really attractive as an investment standpoint from our point of view. And I try not to do any forward-looking statements, but it was that leverageability. It was getting a new company or a new structure that hasn't had to dilute. It hasn't already had a massive run up. Has a vehicle that can perform in our market. That there'll be price fluctuations in uranium. It's already up pretty high. And I'm sure there's a sweet spot, but I don't see, I mean, if they are even attempting anything that COP28 wants to do, that's not, uranium's here to stay. This has just started. It isn't the flash in the pan from 2008. It's a different, if it's a different curve, it's a different look. And that means a larger, more methodical thought of how do we stretch this out, this kind of nuclear run, so that's feasible, not only as a price point for uranium getting it out of the ground, but for nuclear reactors to go, wow, we can't afford $200 for uranium, but if maybe 89 or maybe it's 104.
Well, but on that point, you look at nuclear, and it's a bit of a different industry, right? And the reason it's different is nuclear fuel as an input into the operating costs of a nuclear reactor is like, you can look it up, but it's generally under 10%. Okay, so you're producing nuclear power, and the input or the raw material needed for that power, represents under 10% of the operating costs of one of these facilities. That means that we're entering into a market where security of supply is paramount over price.
Yes.
And it's fundamentally a demand story. Okay, you look at previous cycles, and there was some, acute catalysts that represented a sharp run up and a sharp spike in the uranium price, and then as a function of that fell back down. This market seems much different, in that it is fundamentally demand driven. I think historically, uranium, I think, has been in a oversupplied market probably for 5 decades. Since the inception of nuclear energy, has always been in an oversupplied market. That set of that fallback for the utilities is no longer there, right? And we're into a different environment, a fundamentally different environment, where it is a demand driven story. And then you look at the supply side, and I don't see where the supply comes online to meet this demand in the near term or in the medium term.
Yes.
Because demand right now is outpacing supply growth, and that is a number of factors. Uranium production facilities are obviously, they go through a rigorous permitting process, etc., as they should. But there's also been a lack of investment. We just came out of probably one of the weakest uranium markets historically that there's ever been when you adjust prices, and there's been just a lack of investment in the uranium space. And so there needs to be a catch up here, and that's not going to correct overnight, in my view.
And that's what I like too, is that we have a chance of telling your story to more of a retail, some family office level, that you're having to institutional level. And not many times do people get access to that conversation of, listen, we're talking at this high level with institutions. Most of the time, retail isn't involved. They can't get involved. They don't know what's happening. And this is something that someone could look at. That's very new still. It's very new. And that's what we really wanted to have you on. We're excited for this second nuclear generation, I guess you could call it. It doesn't look like it's going anywhere. We're here early at the start, and we're really looking forward to see what ATHA can do in the next year. $65 million is a nice budget, that's for sure.
Yeah,
So,
that will carry us through multiple exploration programs, and but we will be aggressively exploring in 2024. A couple key dates for us. We've got LUR transaction expected to close early March, followed by 92 Energy in early April, and then expect us to hit the ground running post closure. So it's going to be an exciting 2024 and beyond.
Excellent. Well, thanks so much, Troy. I really appreciate it, and we look forward to catching up with you again soon.
Great, excellent. Thanks for having me.